been interesting to note the fact that we've seen fantastic movements on the JSE All-Share. In fact, no signs of risk aversion coming to the fore. It's really evident in what we're seeing in the Asian markets as well, and also on the Dow Jones. Give us an indication of whether we're seeing risk aversion or risk appetite, where the markets are still trying to figure out how much of a risk Egypt is going to be.
Hi, Lenny. Thanks very much for having me on the show. Yeah, I think obviously, I think in the greater scheme of things, it's probably still early days to know what the full impact's going to be, and we're certainly seeing how a lot of the conflict or rioting, etc., is spreading to different countries, trying to with similar problems. So I think that certainly what we've seen, and obviously this is a question on everyone's lips, is to what extent the rand's weakness, the current weakness, is reflective of general emerging market concerns. And we know from our history with the rand is that it's often used as a release valve for investors who invested across Africa, largely because it's the most liquid currency market. And I think we also saw that the Egyptian bourse was closed and trading suspended. And so if you have positions in Egypt and you aren't able to get out of them, perhaps you turn to the most liquid market and maybe even use currency as an initial release valve. So I think time will certainly tell whether this it fuels itself or whether actually things settle down. I do think, though, that long term this is good for Africa, because I think we all know, people sitting in Africa, that there are a number of different countries which have sat with very long-term regimes, potentially repressive regimes, and we've been wondering when the regime changes would ever happen. And you're already seeing the domino effect that Egypt has started to trigger. So I think long-term, I think it's actually very beneficial.
Apart from all the issues with democracy in those regions and the fact that most of these presidents like Hosni Mubarak have been in power for around 30 years, one of the other catalysts seems to also be rising commodity prices. We've seen it in the likes of food inflation as well, and this is also why there's been a lot of concern on the ground as to unemployment and low wages. What kind of impact is this going to have? We had Jim Rogers saying that more social unrest is going to lead to high commodity prices, but some would argue that high commodity prices has led to social unrest.
Yeah, it's obviously a very interesting debate as to what triggers what. I think the reality is, and we see it in South Africa as well, is that high levels of unemployment means that you have people who have time on their hands and time to think about their fortunes. And so when social unrest, or when the opportunity for social unrest presents itself, you've got a lot of people who are prepared to step up to the plate and actually do something about it. Interestingly, I was reading Stratfor, who kind of assess global geopolitical risk, and their big question is, while there are lots of people who are actually actively involved in the protests and stuff, what's actually driving it? Who's actually driving it? And are there dominant forces sitting slightly below the surface, who are actually driving a political outcome, which we'll only really see probably again, at least 6 to 12 months' time hence. We already know that President Mubarak has indicated that he's unlikely to step down. Currently, is his standpoint, he won't step down before September. Obviously, there are discussions and talks underway, which may speed that process up. But I think, again, I do think that that unemployed people present a blunt tool to people who are moving the levers. And I think I'm not sure yet that it's clear who are moving the levers in these different countries. But certainly, if you have high prices or prices spiraling, and you have people who are unemployed, that's a clear catalyst for a blunt instrument that can be used.
Well, there are other issues at play here, because we've still got protests ongoing. They've turned violent. We've also heard from President Mubarak saying that if he resigns today, there is going to be chaos. And then on the other end, you've got protesters say that they're calling it the Friday of departure, and this is going to be the last day that President Mubarak will be in power. So interesting words that are coming through from the protesters' end, from President Mubarak as well, also from Washington. And then you've also got the Iranian president coming to the fore and talking about an Islamist awakening as well. So it could even turn religious. In the midst of all of this, you've got the oil price, which of course has been propped up. To what extent could we see more upside to the likes of oil on the back of all this news?
Yeah, I think that any disturbance is likely to result in people in people taking more cautious stance on anything, whether it's oil alone or across a broad range of commodities. So I'm not sure. I have no view on whether oil would go up or down from here. What I do know is that it's going to be more volatile, because although the Egypt potentially represents a blockage on the flow of oil via the pipeline and also via the Suez, on the other hand, that from an inventory level, we're certainly not in territory which would send any concern out that we have low inventory stocks. The problem is that it's a classic investor psychology issue rather than physical factors. And I think that's probably, for me, in the kind of a retail space and looking at investor psychology, that's far more interesting to me, because you're caught in the classic dilemma. This whole thing triggers the greed and fear. Africa presents a great investment destination as an emerging market, and it presents above average potential returns. So that's the greed aspect of it, if you can call it that in loose terms. But the fear factor is that, certainly 6 weeks ago, one would never have anticipated the kind of unrest we're seeing. And it's not only manifested itself in a number of African countries, it's also spread to some of the Middle Eastern countries. Yeah. So, if you just think, when you were in December going away on your leave, you were worried about, Portugal, Italy, Spain, Greece. You come back, that noise has settled down. Suddenly you have almost from nowhere a spark which has spread into quite a healthy bushfire at the moment. So, to answer your specific question, up or down, I'm not sure, but volatility for sure.
Well, Evan, it's also quite interesting to note that the cost of ensuring, your savings against default. So you're looking at the CDSs as well. It seems that it's far more expensive in the likes of Ireland and Portugal to what we see in Egypt. So yes, it's a risk factor, but also when you look at investor confidence towards these economies, it's still slightly softer than those of the peripheral European countries. At the end of the day, this could divest or divert some of the funds that we would ultimately see in emerging markets, and in particular into African markets, going into other emerging markets, perhaps looking more towards South America and Asia as well. How do you see this all panning out? And do you think that perhaps all those phone calls that many asset managers have been talking about, that we've seen so many interested in investing onto the continent, might just start dissipating as well?
Yes, I do think there's an element of bad timing about this, and obviously this is certainly not a timed event. So I just, it's just a comment about that emerging markets generally, and for the first time in probably decades, had really presented themselves as a viable investment block, and you've already seen a number of deals in Egypt being put on hold. I think Electrolux and Olympia put on hold, and there's another one I was reading about. And it suggests that when there is turmoil like this, it's much easier to just sit back and watch how it unfolds before making a concrete decision. So I definitely think there's going to be impact on FDI, foreign flow into the countries. As to whether it'll go back into other emerging markets or whether it actually will go into the more developed markets, obviously only time will tell. We've already seen some of the developed markets starting to turn around. We're certainly hearing a lot less noise out of Europe, and that's the risk that the emerging markets run, is that we may slip back a little. Again, I think that is a more short, it may be even a little bit medium term, but I think in the long term, the events in Egypt are very positive for the African continent, and hopefully when we do have regime changes which end up in widespread democracy, as we understand it in South Africa, it should be positive for the continent, and we should see sustained inflows into